Hey everyone, how's it going? Not too many of you here today, which is kind of what I expected because I posted a bit late with the reminder and stuff. Everything's kind of been compressed this time around. Everything got kind of thrown out because it was delayed. So yeah, apologies for that. So probably today's stream won't be quite as long as usual. Ads. That's hilarious. Everyone watching on YouTube will wonder what I'm talking about. I'm thinking about doing this to YouTube actually to avoid that, because the advertisements there's no way of turning them off on here. So I might do the next one on YouTube to try and avoid the ads interrupting it for people watching live. Okay. Thanks, Tia. Yeah, so I'll start again, shall I? I posted this a little bit late with the reminder of today's stream. So I'm pretty much expecting there to be a bit of a lower turnout. A lot less questions have been submitted on eToro than usual by now. So yeah, this is probably going to be a bit of a quicker Q&A live stream this time around, but the next one isn't too far away. This one obviously got delayed quite a bit, so it means that we're actually almost into the end of Q1 now. So the Q1 Q&A live stream will probably be in a bit over a month's time anyway. So it's not too bad if it's a little bit short. Hopefully you guys don't mind. I'm more than happy to. I guess it means I've got more time to answer your questions anyway. So yeah, the way it works, generally I go through on the eToro post first and answer questions that have been asked there before answering questions from the chat. So if you want to ask a question in the chat, you may as well type it now, because last I checked there are only 3. So unless there's more than 3 questions on eToro by now, then it should be a pretty quick, short stream. So probably like 40 minutes, half an hour, something like that, depending how many questions all of you guys ask, of course. Okay, let's get stuck in. So first question here, which I have to translate. Hi Jay, I really appreciate your work and I'm copying your portfolio. I just don't mean something that you can explain to me. I'll appreciate it. That's a bit confusing. I have some liquidity in my copy, but you're not using it. Don't you need to put it to work? Are you hoping to add more assets? Thanks and good job. Okay, so this is probably a situation where the guy has... It's hard to know for sure. There's a few things that can cause this, but probably the most likely scenario here is that he copied without using open trades, which means that it's always going to be waiting for me to open new trades and close old ones so that I've got capital available to do that. And if you head over to my stats page and scroll down, somewhere it tells you my average holding time. So each position, each individual trade in my portfolio, I tend to hold for around 6 months. There are some that have been open for more than 12 months. So if you copy without using copy open trades, it means that you could be waiting for 12 months, maybe even longer, before I can actually invest that money. So I will write a response to this guy as well, because it's quite a frequently asked question. So yeah, I'll write it there as well, because he may not be watching this, or he or she may not be watching this, or they. Okay, let's head back and see what else was asked here. That was a bit of an easy one to start with. I'm used to answering that one. What sectors? I mean, the other thing, actually, just before I go on, the other thing that could be causing it is copying with too little. So if you are copying me with less than $400 value of the copy, then that is too small for new positions to be picked up in a lot of cases, because my average position size is around about 0.25% of my portfolio. So that means because the minimum trade size on eToro is $1, it means that you need to have $400 minimum to be able to open those. Realistically, you probably want 500 or 600 because that gives you a bit more wiggle room for if the portfolio goes down for a while and we have a bit of a drawdown. So that's something that's worth doing as well. Okay. And yes, I am still open to being copied in the chat. I will answer their questions in the chat as well, by the way. As I said, there's not too many here. Okay, so the next question from M. Walswick. Walswick? I don't know. I guess that's probably an initial and a surname in there somewhere, but I'm going to be bad at pronouncing it. So what sectors are you most bullish on for 2023? Yeah, this is an interesting one. So I think a lot of small cap tech will do quite well, the kind of thing that has been battered quite hard from the rising rates. So some of the businesses that perhaps hadn't really proven themselves profitable yet, but that I think if you do a bit of analysis, you can see quite clearly that it's a very viable business. So good example of that would probably be something like Peloton. They actually just had really, really strong earnings. Massive spike up, spiked back down again, quite dramatically as well. But it looks like they're on a really, really good, clean trajectory for a long-term business that's sustainable. They're still growing users. They're still kind of got really good margins, healthy margins. But everyone kind of dismisses it because of the fact that they weren't profitable and they had lots of debt. So businesses like that, I think, are being overlooked a little bit. I think that could be a good kind of area to put some slightly more risky bets. They are risky. So that's one kind of area that I think is going to do well. I think this year we're going to see the continuation of some of the themes from last year as well. So I still think that solar overall will do really well. I think it's going to switch a bit more away from residential solar and towards kind of grid scale solutions. So you probably don't want to be as exposed to companies that are really in that kind of retail facing market, and instead go for the kind of bigger, more institutional kind of names, I guess. And the reason for that is that the people who are going to get solar because of worries about energy crises and things like that are more likely to have done it by now if they were going to do it. So I think we'll see a bit of a slowdown there. And we're already seeing signs of that in the US. The European market still looks quite strong for the time being, but in the US, all of the earnings for pretty much all of the solar companies that came out this past quarter didn't look quite so healthy on that front, especially like the residential side. But with Biden's spending plans and things, I think that the large grid scale solar project should still do reasonably well. Connected to that, I think energy transmission as a market, and by energy I really mean electricity. I think that's going to be an interesting area to be watching. In most countries, the people who actually do that are privatized. They're nationally owned, I should say, not privatized. But you can't trade them. There are a few that are. So the UK, I think Portugal, maybe their grid is, I think, available for trading as well. In the UK, you can trade things like the national grid, but that's not really the way I prefer to get exposure to it. Instead of that, I think going down the route of the people who manufacture the hardware is a really good route. So there's lots and lots of work being done to upgrade electrical infrastructure around businesses who have recently installed more solar, around residential areas where people are installing more solar and they need to upgrade their connections to the grid, and also connections between countries and different regions as well. So the really high voltage cables that are used to transmit over long distances. So there's a few companies that make things like that, and I think that those are all areas that are going to do really well. And I think the last one is probably kind of smart home devices in the tech world. I think that because of the kind of situation we have in the housing market and where people are spending their money, it's more likely that people are going to continue to try and improve their own homes. I think a lot of the home improvement kind of side of that has been done already because of COVID. So I think people are going to start kind of upgrading some of the equipment in their houses. And on top of that, I also think that there's still this kind of long-term trajectory with new buildings becoming smarter anyway. So, and when you look at like the kind of things that were developed for CES and stuff, the kind of technologies that's coming out like Matter, which is this new kind of standard protocol that can be used for smart devices to communicate with each other. I think all of those things are going to do pretty well, especially as they become more affordable. The chip shortage has kind of calmed down a bit. So yeah, I think that's a good area to be. Beyond that, I could go on. I think the auto market is going to remain quite weak. I think the housing market is going to remain quite weak. There are some other kind of trends that you can play around with, but I think for me, those are the ones that I'm focusing on really. So renewables, heat pumps, I still think will do well. And then the electricity stuff, and then some of the kind of less valued tech plays. Okay. Do you think short-term currency trading is a good hedge against tech volatility at the moment? No, not really. I mean, if it depends what you're trying to. If you're trying to hedge against the volatility of tech, surely you would just be better using some sort of a tech-weighted ETF that you are kind of going long or short on, depending on your kind of weighting and your exposure. To me, that seems like the most sense if that's it's specifically that volatility that you're trying to remove. Generally, I'm not really that big of a fan of trading currencies, though, so I'm probably quite biased. I'm not really much of a currency person. I think there's so many variables that you need to consider with that kind of stuff in terms of like geopolitics. So yeah, I prefer to go with the kind of slightly more direct approach than that for me personally. So yeah, hope that answers your question, the third question. I'm going to refresh and see if there's any more just before I start going through the chat. There's not. So I will start going through the chat. And as tempted as I am to read the the most recent comments, I will scroll back to the top. Okay. Let's change the camera so it's just on me, I guess. There's no point in sharing that screen anymore, really. Okay. I notice you never seem to open many sell positions. Is there a reason for this? Yes. There are lots of reasons for it, really. So I guess, first of all, like the contextual kind of market conditions is the first thing. So when I really am very high conviction that the market is overvalued and should be correcting down, you will see me open much more, quite a few more positions that are short exposed. But outside of that, I don't really do it too much. The reason for that, so the main reason that I don't short really, is that shorting is just proven to be a less profitable trade. Your maximum upside really is 100%, because something can only go as far down as zero in most cases. There are some strange edge cases, but for most stocks, you're not going to ever go below that. So the most you can ever do really is double your money in a position that is short, whereas the potential loss from going short is obviously limitless. So you could a cat cam. I didn't even notice that. Well spotted, whoever said that. Yeah, so the potential loss from going short is obviously limitless, because the share price could just continue going up by 300, 400, 500%. it's obviously unlikely to do that in a short time frame. But if it does, then your losses will mount, or you'll be margin called essentially out of the position. And so yeah, that really just means that spotting opportunities where the risk to reward ratio is good for shorting is much more difficult, and so that's why I tend to steer away from it for the most part. The times that I don't do that and that you're more likely to see me taking shorts are when I am essentially using it as a hedge to slightly reduce volatility, usually over the shorter term, for positions that I'm still long on and I'm bullish on for the long term. So, yeah, those are really the main reasons. I hope that answers your question there. And of course, it comes with fees as well. So you've got to pay to be short, and you don't have to pay to be long. Hi Jay, do you think Bitcoin miners could be an interesting leveraged bet on Bitcoin? And do you think we'll see 40k this year? I don't think so. I think 40k is too high for this year. I don't actually have a chart of Bitcoin open at the moment. Let me just have a quick look for it. Here you go. You can see my screen. Okay. Don't ask me why it's showing Bitstamp. That's just the first one that came up. Yeah, I mean, I struggle to see it getting that high, to be honest. 100% in a year where probably the markets are going to be, flattish for the Nasdaq and for tech. I just don't really see it happening. I don't see where the buyers are coming from for it at the moment, to be honest, because we've already seen that Bitcoin isn't really very good at filling its role for hedging weaker currencies. Wow, there's now two cats. I don't know if you saw that one, but he just flew up here. Yeah, I think Bitcoin has proven itself not to really be a good hedge against inflation for the most part throughout time, especially when you consider when we've had inflation. It's not really been that great at it. You'd generally be much better off if you just picked up US dollars instead. So I don't see that market going for it. I think fintech is also producing more and more appealing products with companies like SoFi and Square and or Block as they're called now, and things like that are producing more and more competitive products that don't really need crypto. I think stock markets and trading platforms have become much more accessible as well as an investment for people and a place to kind of place their money and their savings and protect them. So I just don't see the appeal of Bitcoin being as strong really these days. Generally, I'm not that bullish on Bitcoin, to be honest. I'm much more bullish on Ethereum and on the kind of supporting blockchains for Ethereum than I am for Bitcoin, just because I think that the money use case is not as strong as it used to be honest. So yeah, that's kind of my feeling on it. 40k seems a bit high. I'm just kind of trying to see what you guys are talking about. What do you think about Aston Martin in F1? I haven't watched much of the testing yet, but from what I've heard, they're looking quite fast. So that's cool. I think it's really smart marketing for the company. I think Aston Martin stock, I'm trying to remember who it was. There was one guy on eToro. I think... who was it? Was it Marcin? It doesn't matter. There's one guy on eToro who is really, really bullish on Aston Martin stock for a long time and held a pretty sizable position in his portfolio. And to be honest, I can kind of get behind it somewhat. I think it's just one of those brands that has a lot of potential to become, a Ferrari-esque brand, something that becomes a household name. You think like James Bonds and stuff. So I think them being in Formula One, first of all, was like a super smart move. The amount of money that the F1 team and Aston Martin have behind them means that it is very possible that they can just turn it around and really utilize that brand value. So yeah, it's cool. And I like the drivers they've got in F1. So, well, I like one of the drivers they've got in F1, Fernando Alonso. Stroll is Stroll. Hi Jay, how much time do you worry about / study macro, e.g. USD seems to be quite stable and I expect it to be for a long time. Since there is no obvious replacement on the horizon, however, the national debt is starting to reach heights that seem insurmountable, especially with the Fed probably raising rates for a long time to come. That being said, it looks like both China and Russia looks like they are bleeped in terms of their demographics, so US kind of seems like the only real player in town. Yeah, so this is the thing, right? It's I like to compare it to a zombie apocalypse, right? You don't need to be, a marathon runner to survive the zombie apocalypse. You don't need to be, Usain Bolt or whatever. You just need to be faster than everyone else around you, because they're the people that will get caught out. And that's really kind of the same with your currencies and these economies. As long as you're not, in the bottom half, you're probably pretty solid. And as much as I agree that the US dollar and the debt, especially that's related with the US, the national debt is increasingly high and potentially scary. And we have this strange situation with the debt ceiling every year, where everyone pretends that they're not going to raise it, and then they raise it anyway. I don't think there are really very many good alternatives. Maybe the euro could put up a fight, but probably not at the moment with what's going on in Russia and everything. And again, demographically speaking, it's not like the US and Europe don't have problems of their own. I don't really see much else. I mean, unless the kind of BRIC nations kind of work on something together, and this is like really speculative, unless we see like a Latin American shared currency, which has been talked about before, or even an African, especially North Africa, a lot of the countries up there, shared currency, which has also been talked about before in the past, something like the euro, but for some of the largest players in Africa. Unless something like that comes along, I really don't see much that can challenge the US dollar at the moment. If it was going to be anything, it would be the euro. So, yeah, it'll fluctuate a bit, and maybe it will see a bit more weakness. And there's obviously more geopolitical events that could unfold. We could see China do stuff with Taiwan. We could see Russia and Ukraine kind of get escalated further. And all of these things would obviously have effects. But, going back to your question where you said, how much time do you spend worrying about it and studying it? I study it probably more than I should, partially just because it's fascinating. In terms of worrying, not much, really. Not much for the US dollar, at least. For the pound, different story. I've made some very deliberate decisions over the past few years about kind of how much money I keep in pounds in the UK because of the state of their economy. US dollar, no, I'm not really too concerned about it. Okay. You still see Ford growing in the long term? Good question. I've reduced my exposure to Ford a bit recently. Not loads, but a bit. It's difficult because the entire auto industry is now struggling. They haven't really recovered to where they were pre-pandemic. The sheer kind of quantity of capital that is needed to be invested in those companies to kind of transition into EVs is massive to fix the supply chains and things. There was an article in Bloomberg today talking about that some of the aluminium used in Ford to build the F-150 trucks is sourced from Brazil and is linked with potentially some damage to the environment and damage to people's health in terms of how it's been mined and everything, and that has a cost in terms of PR and in terms of fixing it and all the rest as well, and of course to those poor people in Brazil whose lives have been affected by it. But it's a challenging environment, but I think you kind of do have to just zoom out and think like, what direction are we going in? And I think that EVs, I think if you put, for example, the F-150 truck side by side with the regular F-150s, so the Lightning against the regular F-150s, the electric version is becoming increasingly compelling to the US market. And I think it's the same when you head to Europe, and regardless of what kind of vehicle company you're looking at it from, it's always going to be a case where the electric vehicles are now the much more desirable product. So as long as prices come down, which we are seeing because of the pressure that's come in from mainly from foreign car companies, like what we've seen coming out of Turkey and coming out of China and coming out of, to some extent, South Korea, and then some of the startups on top of that as well, and obviously Tesla, who have been at the forefront of lower end of prices in terms of what you're getting. I think all of those kind of combine and make it very plausible that we will see kind of price parity between electric and non-electric vehicles soon, especially if you then consider government incentives and things like that as well. So when that happens, those companies should do, or that industry should kind of pick up when that price parity point is hit, and we see people start to kind of really kind of en masse trading in their old vehicles for new vehicles that are electric. So that's I think the kind of the big catalyst that still lies ahead in the world of autos. In terms of like long term, I don't think you can ever go too long term with autos because they're a bit like airlines. It's very hard to find any of them that remain profitable for a long period of time. It's a very, very competitive industry. So yeah, I'm still kind of happy with them at the moment. I'm happy to hold on for the time being, but I have decreased my exposure a bit. But that's more to do with the industry overall than Ford themselves. I still like the way that Ford has been doing things. There's been some questions over management, but I think it's largely okay. Oh, that's interesting. Interesting question here. Can you talk a bit about why you chose to invest in Siemens and IBE and the balance? I'm assuming that's meant to be because there's a bit of a typo between the two, and not Investus, for instance. So Vestas is a wind energy company. So Siemens actually is one of the most complex company structures you can find, I think, if you actually properly look at it. You've got Siemens Energy and Siemens Gamsa, and like there's it's split into a lot of different areas, and the company spans overall an awful lot of areas. The reason I like Siemens is because they are very much in the kind of electrical infrastructure and industrial infrastructure arena. They're one of the biggest players there. So that kind of goes back to what I was talking about before about high voltage cables for transmitting power and things like that. They produce everything involved in that. The same for water. The same for things in shipping. A lot of kind of massive industrial kind of buildings. A lot of thermal stuff. Things like large, what's it called? Large kind of shared heat pump systems for multiple buildings. I can't remember what it's called now off the top of my head. For some reason, it's just vanished from my vocabulary. But yeah, they've got their fingers in an awful lot of pies, and they're just a very competent company. They have a good dividend. It's quite well balanced. I think that's kind of what drew me to them quite a lot, really, is that I just found them to be a very balanced company in terms of exposure, and they're also very well exposed to things like rail as well. And high-speed rail in Europe has been expanding a lot over the past 5 years or so, and I think that's looking likely to continue. There's routes being kind of built through the Alps at the moment, and up in kind of the direction of Estonia, and it's very likely that more routes will be built towards Ukraine as well, to try and kind of connect them up. Even in the UK, you've still got those kind of things going on. And I think that kind of infrastructure is increasingly getting good investment. And it's also one of the ways that governments like to find their way out of the kind of situations that they're in currently, is to just spend on infrastructure. And Siemens are one of the people that would benefit from that massively, just because of their scale and the scope of what they offer. So yeah, they're a very different company to someone like Vestas. IBE, kind of the same again. They're a bit more kind of focused on energy. For them, they have much more exposure to different kind of areas of renewables than everything else that I have in my portfolio. So Vestas and Ørsted are my kind of my wind orientated stuff. They have a bit of kind of hydrogen exposure, mostly indirectly. We've obviously got some of the solar stuff. I've got a very small position in STEM, which is kind of battery storage stuff. I've had SSE on and off for quite a while now, who have exposure to hydro. But really, I didn't have very much exposure to nuclear. And I looked at a few options, and before the French took, who was it? I can't remember now. I don't know if it was EDF. Before they kind of took the majority holdings in that, I was weighing up that as an option. But yeah, IBE is just one that I think is a really good kind of exposure to a kind of well-diversified portfolio of generation assets, specifically in the power industry. So and that's one of the other differences is, Vestas and Ørsted are producing wind turbines, and then going out and installing them. They have contracts to maintain them, but they don't own the wind farms usually. And companies like Siemens is the same. They produce these things, but they sell them, they service them. They don't own them long term. They don't kind of keep them as assets. Whereas IBE and SSE are not the same as that. They tend to kind of own and operate those assets. So yeah, that's the big difference, I guess. Very long-winded answer, but that's why I like them. Cat MVP. What premium trading tools do you pay for? Example, Seeking Alpha paid version, and which would you say is the one you use the most? Well, I guess I could kind of show you a little bit. So there are a few that I use. I think you've already mentioned it, but Seeking Alpha is probably the one that I use the most. The big weakness of Seeking Alpha is that they're not quite so great. I say that while I'm on the page of a European stock, but they're not quite so great at non-US stuff. I think you still have to be mindful as well of bias and things, especially when you're reading these kind of articles. A lot of the times you find the same people writing over and over, so you can get a bit kind of overexposed to one view set. But I just love the way that Seeking Alpha displays everything. There's a lot of features on here that I really like. I mean, even these, as much as they have their problems on the factor grades, I think that overall they're really, really useful. The only one I kind of discount for the most part is the momentum one, because I just don't think it's relevant what the price of something is. If it's been going up recently or if it's been going down recently, the only thing that really matters is what price is it right now, which that doesn't tell you. That tells you what price is it right now in context to where it was, over the past few months. So I don't like momentum too much, but the rest of these are really good at a glance kind of things that you can look at and kind of get at least some sort of a picture on how things stand. Some of the other stuff I really like on Seeking Alpha, I love the ability to just press peers. a lot of the time it comes up with things that aren't related, but most of the time it comes up with really good competitors. And here is a good example, right? I actually own all of these first three. I've looked at investing in this one. This one isn't quite as related, and I've never really looked at those guys. But these three are all in my portfolio, and I can pretty much tell you that they do all do more or less the same stuff. They are pretty direct competitors, so it's good to compare in that way. It's something that I really like about this platform. And then I just like it for like earnings and stuff. You can see what's going on pre and post market very quickly on here. They're always quick to update when earnings come out. Yeah, it's my favorite platform out of all of them for sure. Is Seeking Alpha. So yeah, in terms of which version of the premium I use, I just use the premium one, not the pro or whatever it's called. For me, that's enough because I don't really get as much value from the like proper pro stuff that you can like subscribe to people and things like that. But I haven't really given it that much of a chance either, so I can't say for sure. But yeah, if you're thinking of signing up, wait like a day and I'll have a referral code. And I'd very much like you to use it because I like Seeking Alpha. I've used them for a very long time. Next up is Stockopedia. So this is pretty much what I use this for, is anything that Seeking Alpha is bad at. I use Stockopedia for. Sometimes I use it for US stuff as well, just to kind of, get a kind of second look at things. But I prefer how things are displayed on Seeking Alpha. Really, it's kind of a preference thing, though. Like they're much of a muchness. You can use kind of filters and things to screeners even to kind of look through stuff, and they have pre-built screeners on here quite a lot. But yeah, no, I like them for how they kind of handle more European stuff, especially smaller stuff and Chinese stuff as well. They've pretty much got everything on here. It is more expensive because you have to pay by region. So you can see the regions that I've got here. It can add up if you have a lot of regions, but it's still a decent option for sure. City Falcon, I've tried to use. I haven't got super into it. I really liked it originally for the kind of sentiment stuff and showing you the news for different kind of companies and how it's how that's kind of being perceived. They've added some more stuff, like they've added the ESG stuff, which is really nice. There's a lot on here, but it's still very much a startup, and you can kind of tell by the interface, like it's just super cluttered. It's not super easy to use and navigate. I don't really use it that much, honestly, as much as maybe I should. Would I recommend it? I'm not sure at the moment. I'm not sure if I'd recommend it. I don't think it's that worth it unless you're really kind of keen. You're probably better off going with a Bloomberg subscription, to be honest, for news anyway. Bullsheet is just kind of an eToro thing. I think most popular investors use it at this point. I do pay for premium. Whether or not I'll continue to, I don't know. There's some useful stuff on it, like showing risk things, but it's not that amazing. Bloomberg. Honestly, I think it's worth paying for Bloomberg Digital for anyone who's really keen on markets. I think they have by far the best quality news. To be honest, I am constantly kind of battling with myself about if I should be paying for full Bloomberg terminal access. It's borderline on how worthwhile it is for me. It would give me a lot more insight into things like trading volumes and a lot of the kind of capital raises and things that are going on behind the scenes, and the structuring of debt and stuff like that. So that would be really useful. It's also going to be, ultimately it's a massive product that does like a million things. That's overkill for most people, but for news, definitely Bloomberg is like my go-to. I love it. And the last one is Crunchbase, which is trying to tell me to renew, I think, on that page, which is also quite expensive. This is a weird one because I find this really useful for looking at acquisitions and acquisition targets. You can see even some of the companies that I looked at recently, like Redwood Materials, which I'm pretty much constantly looking at. Epic Games, I'm always looking at, and things like that to see who's contributing to this stuff. It can be very useful when there's IPOs coming up to look at who's invested in them, who might potentially be offloading shares. You can find out a lot from Crunchbase. So yeah, I like Crunchbase. Again, it's debatable how worthwhile it is for your average person. If I were to tell you like two that you should definitely get, I would say Bloomberg News and Seeking Alpha. Those are the two that I would recommend. Pretty much anyone who's like really keen on investing and trading should be considering paying for. But you may prefer Stockopedia, you may prefer Goo Focus. Even TipRanks, for example, is a pretty good platform as well. Ticker is a good platform. There's a lot of them these days. Part of it just comes down to your preference on the design, I think, at this point. It was a long answer. So I hope that helps, Peter. Does your cat copy you on eToro? No, he doesn't. Sometimes he looks over my shoulder. And sometimes he tries to open trades for me by walking across my keyboard, but I'm too quick for him, so he doesn't do that. And I usually lock my computer to make sure that never happens by accident. Not that he comes on my desk very often. Cat is buying trees and CO2 offset every month. I mean, the cat is offset. I should say that. The cat is offset. Do you have any strong feelings about Microsoft's attempt to get into advertising search space? Do you think they'll be able to take away significant market share from Google? Oof. Microsoft doesn't have the greatest track record of launching new things well. I'm going to go ahead and say that. Like, we can think about some stuff like Xbox, which obviously has been a roaring success for them, and Azure, that has obviously been a big success. But does anyone remember Windows Phone? I do. I thought it was brilliant, and I actually made some good money trading around it. But it's not around anymore. Or Mixer, which was their competitor to Twitch TV, where we are right now. That's obviously no longer around. If you look at some of their acquisitions and how much they wasted the potential of them as well, you could argue that they haven't really done very much with LinkedIn since acquiring it. I don't think they really did very much with Skype when they acquired them. I just think that Microsoft is almost a bit of a slow-moving behemoth. So how well they're going to do at this, I'm not sure. The thing that's on their side is that they have been doing search for a very long time now, actually. Bing, as much as most of us don't use it, has been around for a long time. So at least it's well established. On the AI side, they have been putting money into the right kind of places, evidently, as we're now seeing with ChatGPT. And what they're working on there. And I do think that they definitely have the lead over Google in that area. And I also think that ChatGPT is disruptive enough that it will hurt Google for sure. In fact, I actually think that Google generally has become a lot less useful at what people used to use it for. It's great at finding you products. It's great at finding you news. It's very, very bad at finding you really specific stuff. If you go onto Google and you try and find a research article about something, and you're trying to find out, the different opinions of leading neurologists on some sort of brain issue, Google's not going to tell you that in a very effective way whatsoever. It probably won't even link you to a site that tells you it properly. It'll probably link you to a news website or something like that, which is just not that useful. And you really have to kind of play around with your terms in order to get to what you want. Whereas if you ask ChatGPT those kind of questions, it's going to do a much, much better job, because instead of just kind of searching through everything and just putting it in a big list of what's most popular, or what it thinks is most popular, it's actually going through that big list, compiling the information from them all, and then presenting the bits that are relevant to you in a kind of newly structured way. So like it's really different to traditional kind of Googling in terms of how AI search is going to work. And yeah, I think Microsoft are ahead. To be honest, I think Google has been far too focused on generating revenue from advertisers and things, and ultimately they haven't really evolved the search product in a long time. If anything, I think it's got worse. So yeah, I think Microsoft has got a chance. Would I be like betting the house on it? Definitely not. It's far too early and far too up in the air at the moment to really know for sure if they're actually going to succeed, or if it's going to be someone completely new or someone that none of us have heard of. Thoughts on Tesla? Oh, Tesla. What are my thoughts on Tesla at the moment? I mean, it's a good question. I'm not sure what my thoughts are on Tesla at the moment. I think the valuation came down a lot and looked a lot more attractive. Let's have a look and bring up the chart. Wait, what is this? That is not Tesla. I typoed, that's why. I was like, that chart doesn't look like that. Okay, here we go. Yeah, I mean, I think it was reasonably clear down here that it was getting a bit. It was gonna have a bounce, even if you think it was still overvalued at that point. It was gonna have a bounce. This is about when I made my article actually about Tesla on eToro and said that I was selling out of my short positions. And yeah, I'm glad I did. Because if I didn't, I would have not earned as much. I think they're desperate to release a new product, honestly. Like it's really getting a bit desperate. As much as the Model 3 has done amazing for them, and the Model Y is doing well for them, they're really reliant on those two products now. And as much as in the US that has mass market appeal, and in Europe it has a good amount of appeal. In Europe, generally they favour much smaller cars, and they need to get a small car on the market if they want to stay in a dominant position in Europe. And I think when you then kind of zoom out and you look at countries like India and places like that, which are massive markets, it's really difficult to see where they're going to how they're going to break into those markets, and how they can kind of justify their goals of millions of cars being sold every year without producing models that are viable in those kind of markets. So yeah, I think they just need more models really badly. I think the Cybertruck has taken so long that it may struggle to sell, and it wouldn't surprise me if the price of it changes. If the specs, I don't even think they really ever properly published for it. So there's a lot up in the air on that side of things. The same is somewhat true with the semi trucks. We still don't know what the kind of the load that they can take is, and how much that affects range and everything. With Biden spending so much on charging infrastructure in the US, I think that the advantage that Tesla has for the charging network will diminish somewhat. Probably not entirely, because the US is really big. It's not quite the same as Europe, where there's a lot of kind of charging infrastructure. But yeah, those are my concerns. I don't know if I would be investing in them at the moment because of that. I think if I look at it from the perspective of things like AI, and in terms of self-driving and the Tesla robot, none of those excite me, to be honest. If I wanted to invest in robots, I would go and invest in Hyundai, who own Boston Dynamics. If I wanted, and they are easily at least 2 years ahead still, minimum. Probably much more like 4 or 5 even. Maybe Tesla will prove me wrong, because they can move quite quickly sometimes. For things like AI, I'd rather invest in Nvidia or someone that's making the hardware properly at scale. Yeah, I don't see a really compelling reason to own them, aside from the fact that they are very profitable at the moment. But I think, as I said before, car markets are very competitive. There is no doubt that competitors have caught up to Tesla somewhat, not in everything, but they have definitely caught up on a lot of things. So yeah, I'm kind of neutral, I guess. I'm not bearish, I'm not bullish. I don't really want to own them, but I wouldn't bet against them at the moment. Did you take a look at Porsche, Jay? Any thoughts? You know what? I haven't. I'm not sure if it was you that asked me this before. Someone did ask me to look at Porsche, and I said that I would, and I absolutely have not done that. Yeah, no, I haven't looked at them, so I don't know what I can say really. I think it's a very strong brand. I think their electric vehicles are a really compelling one, and one of the best ones out there at the high end, if not the best. That's about as far as my opinion goes with them, I'm afraid. I remember you said that you are now kind of a nerd about solar. Which company is the best in your opinion? Oof. I think at the moment, as much as I kind of hate to say it, because the solar system that I got installed on my previous property was Solar Edge, and the one that I'm planning here is going to be Solar Edge, I think Enphase is probably the best now. Yeah, they just have a very good ecosystem that they've already built up for the batteries and the microinverters and the charger that they've got now, and some of the other stuff that they're working on is really, really compelling. It's between them and SolarEdge, but the difference really is that Enphase's management is just absolutely on it. Every earnings is a beat and a raise in guidance, pretty much. It's just constantly outperforming their own expectations. And it's not like their expectations are low. I'm trying to remember off the top of my head, but I think last quarter, what they reported was still 40% year-on-year growth. Yeah, and that's just crazy at a point when the world is in the kind of condition that it's in, and that's amidst a slowdown in the US as well, in the US market for them. But they're just like expanding so rapidly into Europe and other markets. If I were not to pick them, though, I think, weird as it sounds, I would really consider companies like Schneider Electric or ABB in the list. They don't make panels. They're nothing really to do with that. Their inverters aren't fantastic, but they just have so many other kind of supportive products. And as homes and businesses especially start to kind of go on this journey of making their electrics smart, the kind of products that these guys are producing now for monitoring these systems and managing them are they're just really, really, really good. There's a revolution going on in this industry right now that nobody's talking about, in my opinion, and it's why I have such high exposure to it, and it's also why I have those three companies that I showed on Seeking Alpha earlier. I just can't pick one because the theme is just doing so well that I can't only have exposure to one. I've got my favorite, which is ABB, and I could even add more really, more companies beyond those three, and I've kind of got some others that are similar but not the same around it. But yeah, in terms of solar, like I think that's a big thing as well. The people who make all of the kind of supporting infrastructure for it and electrical bits and bobs. But one thing I would say is, if you were looking to pick one stock in solar, I would probably tell you not to. I would tell you to take SolarEdge and Enphase. Is what I would probably say is the best thing to do. Not that I would give you financial advice, because none of this is financial advice. I don't know your personal circumstances, blah, blah, blah. Please do your own research. I am not your parent. So, we're all adults. We all have to make our own decisions. And if you want personalized advice, then why are you on Twitch TV listening to me? I guess. This is lasting longer than I thought I would at this call. Some good questions, actually. I'm enjoying this. It's good chat. Is the euro going to get better in the future against the US dollar? Yeah, probably, I think, to be honest. I think that there is a good amount on Europe's side, really. And I think a lot of it actually comes down to how their society is kind of structured. It feels like the US has got a lot of potential to have really big catalyst events that hurt the economy a lot. And I'm going to use a bit of a weird example for that. I know this is like a strange kind of way of looking at things, so you're going to have to bear with me a little bit, but I think the situation in Ohio with the train that derailed is a really good example. That train derailed, released a bunch of chemicals, petrochemicals into the air, like all these weird things that are used to make plastic with, and they evacuated part of the town, and lots of people are starting to get sick and unwell, and animals aren't liking it, wildlife isn't liking it generally, nature, plants and things aren't looking great, the water systems aren't looking great. And so far, basically nothing's been done, which is a bit weird because it's been a while now. And I think it's the kind of thing that's large enough that the government would have kind of stepped in and said, whoa, let's do some things. And hey, you're a very naughty company. Please pay some money to help us fix all of this. But nothing's happened. And that's a little bit scary in terms of having your money invested in them as a country, because that kind of thing could have happened anywhere. And Ohio isn't the hub of US, US growth, is it? It's not where all the world's biggest companies are from, but there are some there. And you've got all of these people who are losing their jobs because they can't work because they're so unwell. They have no healthcare because they lose their jobs. They're too sick to work. They're not producing for the economy. You have towns that are becoming potentially deserted as a result. A massive cost of cleanup that who knows who's really going to pay for beyond the kind of minimum. And it just kind of feels a little bit unstable. And it's like that is like a standalone event. I get it. You can say, oh yeah, you're just being silly and kind of extrapolating from one edge case black sheep event. But then, like, if you rewind to how things went back when there was the really cold period in Texas, and their grid down there wasn't really connected with California's grid and stuff, so they couldn't talk to each other and they couldn't, transfer energy or anything. And everything that happened around that. Or if you can rewind further and look at Flint in Michigan, where they had the whole lead in the water crisis that basically just never got fixed. And the way that the kind of cities and stuff are designed out there, where it's so road-centric and driving-centric, and there's no real public transport, and it's just not really sustainable because they have to spend millions and millions. Pretty much every city is like slowly going bankrupt because they just can't afford to maintain all of the roads because there's so much of it, and so many car parks and all of the rest, and the density is just not high enough to make it really that viable with taxes. They either have to put taxes up and then people just go and move elsewhere, or they don't maintain things and things get worse. And Europe is so different to that. Unlike all of those things, it's just more structured and organized and more resilient against weird events like that happening because of mainly just because everything's older. So, cars weren't a thing, so we didn't really design our cities for cars. We designed them for, people, and horses and whatever else. And then like it's the same with like the regulations and stuff. I mean, this is kind of political, this point that I'm making, I guess, but it does concern me. And, this is why we've got Biden in power, that these things are happening, right? It's not like we've got Trump in and we're a really, really right-leaning government that's hyper-conservative or anything like that, or libertarian or anything. This is a relatively center ground kind of situation. And yeah, I just find it to be a big risk in the US. And I feel like eventually some climate change event or something strange will happen somewhere that is going to cost much more than they can easily handle. And unlike Europe, which is a bit more prepared to kind of deal with those things, I think, just because of the kind of nature of society, the US isn't in such a good position. So this is a really, really, really weird answer to the question: is the euro going to get better in the future against the US dollar? But if I were to like pick a continent, pick a region, because not really continents, I guess. But if I were to pick a currency to bet on over like a 10-year period, I would probably pick the euro at this point, even with what's going on in Russia. But yeah, I'm not a currency person, and you were probably asking for short term, and I just don't think that short term. I can't tell you what it's going to do tomorrow. I'm sorry, but maybe you weren't asking that. So yeah, that's my answer. I hope it helps. Sorry if it didn't, and I just went totally off the rails. Do you know who is dominant in charging infrastructure for EVs? Yes and no. It kind of depends on the region, really. I wouldn't say there's really anyone that's super dominant. But there's a lot of kind of startup companies. I think what's weird about the EV charging situation, is that there's a lot of companies that don't actually produce the hardware that they're using. And so actually, when you look at it from the hardware side, there's only really 5 or 6 really big players. And that, again, going back to my kind of picks on the electrical companies, is why I like companies like ABB, because behind your BP Chargemaster or your Shell, whatever they call it, or your insert trendy sounding new startup with a purple logo here, EV charging setup is probably just a company like ABB that have built it, and then they've just stuck a sticker on it and built the little app on the phone and stuff that lets you pay for it all. So yeah, it's another reason that I like those kind of companies. It's not all like that. Some of them do make their own stuff, but yeah, I'm not too sure how worthwhile it is to invest in that industry with the state of it at the moment. It's a bit messy. Really detailed answer. Thank you. I'll reach out if I want the Seeking Alpha referral code. Drop the referral on Discord. Yeah, I will do that at some point. Your best top 5 crypto holdings at the moment. Your percent holding of personal holdings. Oof. Okay, I'm going to have to go off the top of my head because, it's in far too many different places for me to try and look it up. Ethereum is definitely the biggest. Probably honestly, it's probably over 60% in Ethereum, maybe even over 70% in Ethereum. I have a small sliver of Bitcoin, like 5%, let's say. That might be the second biggest. Matic and Polkadot are roughly evenly sized, probably also around 5 or 6%. I still have Ultra, which I like. I still have Flow, which I like. That might be the second biggest. I have a bunch of stable coins, and I have a few small projects that I kind of like, but I'm still skeptical of. So yeah, I'm still holding on to things like Power Ledger and things like that. A few of the kind of decentralized platform stuff, the DeFi projects, but nothing substantial. Lots of little tiny bits here and there. A little bit of Crow, a little bit of Nexo, just as almost at this point as contrarian plays. Everyone thinks that they're both going to turn out to be big Ponzi schemes and go under. I think while they've survived this long, they might keep surviving. I'm not convinced that they are necessarily big Ponzi schemes. although they may well have overextended on their marketing or whatever. And if that's the case, then probably their tokens are a bit undervalued. So yeah, that's it really. I mean, it's not anything too crazy. I mean, I'll look at. I may have forgotten something, so I'm just going to quickly look on CoinMarketCap and just see if there's anything I missed. But I really need this to be in dark mode, or I cannot read it. Okay, that's better. Yeah, I think Matic is probably my second biggest. I still got a tiny amount of Solana. I don't have most of these. I don't have any BNB. I don't have any XRP. I don't have any Cardano. Yeah, Polkadot I've got quite a lot of. Don't have any Litecoin. Don't have any Tron. Don't have any Sheep. Chainlink. I've got a bit of Chainlink. That's not a bad one. Yeah, there's not too much. I'm just nowhere near as bullish on it generally overall these days. I've got a little bit of ICP, a tiny amount of Near Protocol, I think. Actually, I don't know if I ever bought that, to be fair. Yeah, that's it. That's pretty much all I'm holding for the most part. As I said, some other projects like Chili's I still like as a smaller little kind of side project. Flow obviously was up there earlier. I said about that. Yeah, there's really not too much. Loopring I still think is a good crypto. Yeah, that's kind of my verdict on it at the moment. I don't think there's that much exciting that's going on in crypto at the moment, to be honest. I do feel like it's been not overhyped as such, because there was definitely loads of potential to make a lot of cool things. But I think it's getting to the point where the world needs to see something cool that works. And you can argue that there are cool things that work from Loopring and from Ethereum and stuff in terms of just what they do for trading and for markets and liquidity and things. Like you could just power the London Stock Exchange using these kind of systems, and it would work really pretty well and be a cool system. That's an improvement on what we have. But beyond that, there really isn't that much going for a lot of these projects. I don't think. A lot of them just haven't proven themselves. I mean, I mentioned Power Ledger. I mean, it's tiny. I'm sure they're probably doing awful. I haven't looked at it in a long time, so prepare yourself for a disastrous looking chart. Okay, never mind, it looks quite good. If you go to all time, it'll look worse though, as you can see. I still think that what these guys are doing is really interesting in terms of essentially trying to, make electricity much more tradable. There's other stuff like it as well though, so it's hard to know. Crypto's a strange place at the moment. Okay. Are there any more questions? Because if not, then I think it looks like I've run out. So I may have to call it a day. Nobody's saying anything. The viewer count is slowly dropping. So I'm going to go ahead and guess that that is the case. Hopefully the ads didn't interrupt too much. I'm going to look at using YouTube next time. Just because the ads is just really annoying to have to deal with. What's your overall thoughts on the portfolio for the year? That's fun. Thanks for the Q&A. Overall thoughts on the portfolio for the year. Well, I mean, let's have a kind of a quick look at it. Why not? He says. I think there are some changes that I've kind of been eyeing up doing for a while. In terms of some of the kind of trimming that I need to do. I feel like I've got too many positions to monitor properly. I understand why I have a lot of them. An awful lot of them are very small though. Like if you look at how much of the portfolio is less than 1% position size, let's go on value actually instead. Less than 1% down here. You know, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, probably another 15. Yeah, so like 25, half the portfolio is less than 1%. A good number of those are less than 0.5%, more or less. So yeah, I feel like I still need to do some trimming, and kind of slim things down a little bit more. A little bit spread too thin, and I think it's hurting the performance a bit. But yeah, I think the themes that I'm exposed to are still kind of the key ones, right? Like, you know, Enphase is biggest position, ABB is just behind it, almost the same, and SolarEdge. So you've got SolarEdge and Enphase; they're both pretty much the same target market. ABB, and further down here we should have Eaton, and then Prysmian Group, and further down, where are they? I've lost them. Schneider Electric down here. They're all in pretty much the same sort of industry, debatably also with Siemens as well. So yeah, they're all kind of the same. Those are like the two really big kind of areas of investment. Then I've got a few kind of standalone big positions up here. So, you know, Ford, Microsoft, Ubiquiti, AMD, Rockwell, and Boise Cascade. Really happy with all of those. Lovesac maybe a little bit overexposed to. It has just rallied quite a bit, but it's also still, I think, pretty far down on its valuation. Really happy with Cedar. Could do with more exposure to NIBE maybe. 2.5% feels a bit small, but it's difficult because it's, you know, Swedish stock, not as much volume. Yeah, I mean, I'm pretty happy. Like looking through it, I still look at it, and I do this all the time. I keep thinking, I've got too many positions. I need to streamline more. But then I look down the list, and I struggle to find what I would really cut out. I think Plug Power is one that I would like to get rid of a bit more of. It's just too speculative. It's only at 1.19% now, though. It's difficult. It's difficult managing portfolios, trying to decide where to prioritize your funding. You know, like I think T. Rowe Price, for example, I've been holding on to them for a long time. I bought into them at the start, right before all the really awful news started to pile in on the economy. But I think that it's getting to a point now where things should start turning around soon, and they should start doing well. So you can see I actually added to them a couple of days ago. I think that they'll do well over the next year or two. It's tricky. I think probably too much exposure to Ford as well. It's one that I may have to look at changing a bit. But yeah, I'm pretty happy with where everything is. How it's going to perform throughout the year, I still think, despite the fact that I'm going to keep exposure to Ford and some of the autos, I think they're probably going to have another really bad year. Not really, really disastrous, but bad enough that, you know, probably at the end of the year I'll be like, why didn't I just get rid of all of it? But you know, you never know for sure though. Nothing's guaranteed, so I could be wrong. Yeah, I think it's companies like Funfair and things like that that are a bit smaller, that kind of get overlooked and people don't look at, that I think will do well. So, and as I said, really, really bullish on electricity related stuff. So those are kind of the big areas. Electricity is the area that I'm most bullish on for sure. Okay, that wraps it up, I think. So thanks everyone for coming. I know I posted on eToro very late this time. I will try to do better next time. And as I said, I'll look at doing it on YouTube. If you see me on social media, please be wary. There are lots and lots of scammers. So make sure that you're following the verified me on both Instagram and Twitter. I have a check mark. That's pretty much it. Thanks for tuning in, and I will see you all next time.